All right. It was a wild day in the stock market today. We had the FOMC statement came out. Jerome Powell, he raised interest rates as expected, a quarter of a point. Not a surprise at all to traders. Okay. We kind of expected that. What kind of caught people a little bit off guard and what led to that initial sell-off about 66 points lower was the fact that they're going to be raising rates about 7 times. There's a consensus for about 7 rate hikes through the end of this year and even more going into 2023. So that's what spooked the market initially. But then his presser comes on and he whispers a lot of sweet nothings into the ears of traders and investors. And we, after a 66-point sell-off on the S&P 500, we get a 106-point rally to the upside, and it ripped. I mean, it was a thing to watch. I haven't even made a trade yet today or yesterday. I closed out of my QID trade yesterday for a 3% overall win on that trade, but I haven't made any moves since. Now, the market has rallied about, I think I wrote down 196 points off of yesterday's lows. So off of Monday's lows. That's crazy. I mean, that's almost 200 points that the S&P 500 has rallied. So there's this panic among traders like, I got to get long. I got to go buy something. And they'll almost buy anything. I'll buy Apple or I'll buy Amazon, whatever. You know, they got to buy something. And that's what gets so many traders into trouble so far to start this year, is that need to chase after these big moves. But then let's ask ourselves, how many moves have we actually seen hold up this year? None. There's not even, you've had a rally for like 4 days. That was pretty much it off of the January lows. That was as good as it got. And then you had multiple rally attempts of 1 day and 2 days, but they couldn't hold up. So we're at a 2-day rally here, and there's very little faith, in my opinion, that this market's going to hold up. And oftentimes too, and I'm not saying this is going to be the case for tomorrow, but oftentimes you will see the FOMC respond very positively or very negatively to the FOMC statement. The market will. And then the following day, it completely reverses. And so you have to be very much on guard for that, because that's of a strong possibility, especially with the fact that Jerome Powell is trying to raise rates here. He's doing it very aggressively. The market, they feel like, okay, maybe it's not going to be that bad, but it is going to be bad. I mean, we're on the cusp of a World War III with Russia, and we have China shutting down again. Yes, there was some favorable comments that came out of China. That was one of the major reasons for the NASDAQ rally today, was the accommodative policies or the assurances that China gave in regards to its stock market, and with the China shutdown because of COVID, because of the COVID outbreak. So you had stocks like Baba go up 35, 36% today, like crazy moves. So let's go ahead and get into those charts. Also, make sure to like and subscribe to this channel, and post in the comments on YouTube, what are you looking at? What charts do you want me to look at? And we'll go over all of them today. So let's go ahead and jump right into the SPY here. But we'll start with the Qs, okay? Let's start with the Qs. Consistent downtrend off of the January highs. We've seen a few attempts to break above it, but we haven't seen anything like what we saw today. Now look at this. That's a big break right there. I wasn't sure if we were going to get it about 15, 20 minutes out from the close, but that surge into the close pushed it right through it. Now, can it sustain that move and get that follow through tomorrow? Because the one thing it has yet to do is establish a higher high. Kind of got a lower low right here. This was on Monday. You broke below the lows from February 24th. You broke below them, so you did slightly establish a new lower low. Some people may even look at it and say, it's not enough to say it's a lower low. Let's call it a double bottom trying to be formed. Okay, I can give you guys that. But where does it really need to get in order to say, hey, the market's trying to establish a new trend and it's trying to establish a base that it's going to come out of? It needs to get above these March highs here. The highs from March 3rd, it has to get above that. So breaking above this declining trend, that's important. But it needs to get back above these highs from March 3rd. So that's the biggest thing for the Qs right now. And it hasn't done that yet. I also mentioned already about the fact that the market has not done a very good job at sustaining bounces in this downtrend. Here you had one in early January. It lasted 3 days. And then finally, the whole market completely fell apart on it. You had multiple attempts here. This was a good bounce. This was a good bounce here off of the January 24th lows, followed by 3 sell-offs. And then you had a wicked 4-day rally that everybody thought market's going straight back to all-time highs. That's kind of like what we're seeing here with this candle here and this candle here. They're very similar. Even the ones from yesterday are very similar as well. Okay, so when you're looking at this one and this one, compare it to this one and this one. Bounce attempts are very similar. Even the previous red day is very, very similar. So similar market psychology here. Would I be surprised if we went higher tomorrow? No, I wouldn't be surprised at all, or even the next day. But it's going to come down to, can it actually establish a higher high and break this trend of lower lows and lower highs? That's what remains to be seen. So, in terms of moving averages, we broke above the 5-day yesterday, pushed back above the 10-day today, and then just inside that yellow line there, you can see we broke above the 20-day moving average. It's kind of crazy with all the bearishness that we've seen. Prior to yesterday, we had sold off 7 out of the last 8 days, and yet we're already back above the 20-day moving average. So there is some bullish developments. That's a big deal, breaking back above the declining trend line. Is it something that I would get super bullish about? No, because we've seen plenty of times where these rallies, whether it's a 3-day rally like what we saw for the February lows or a 4-day rally here in late January, they fall apart. Now, if let's say the market's going to do great now, let's say everything is behind it, the worst is out, we've already priced in 7 rate hikes, we can almost guarantee that inflation is going to be under control by the end of the year. Ukraine and Russia, nothing to worry about there. COVID shutdown and China, nothing to worry about there. Okay, let's assume all of that. Let's assume the market's going to rally from here. Are you going to need these 2 days of the market rally in order to make your year better? I mean, it would make it better if you could catch it at the very bottom, but it doesn't hurt to have a little bit of caution here in this market and to just say, okay, let's just see how it plays out. Let's see if we can get maybe a little bit of consolidation and then a breakout that takes us above the February highs. Let's see if it can sustain itself rather than getting in maybe at 340 on the NASDAQ, or maybe even like higher. Maybe we get in at like 348 and then have the rug pulled on us. We don't want that. That's what we're trying to avoid here. So I've said this in previous live streams and previous videos, more or less is more right now. Okay. The less you do, the better off you'll be in this market. I've traded I've made a number of trades so far this year, but I haven't made a ton of trades, but the ones that I've made have been very intentional and very profitable. And so I'm actually doing pretty good on the year, despite the market being down as much as it is. So you don't have to get right in at the bottom. And so many people feel like, okay, if they don't get in right here, they can never get in. Just let the market set up for you. Let the market show you what it wants to do. I actually tried at one point to get short on this market here, going into the or not going into it, but after the market started to bounce and it started to waver a little bit. Let me pull up a five-minute chart here. It was actually with QID. I'm glad I didn't do it, but I think it was like around 2097 that I wanted to pull the trigger at, and it never. If it would have broke above this level right here, I would have gone in long on it, but it never did. It just kept on tanking, and I never got in it. So that's something I'm quite thankful for. But yeah, this rally here, yes, you get some massive moves from the FOMC. I would say today was even more massive than what probably anybody was expecting, especially following that 66-point decline. But it also tells you too that and I'll pull up the SPY chart now, and I'll get to all of your questions too, I promise. When you look at the FOMC statement, you oftentimes will get these head fake moves, and they're very undependable. At first, when I saw it, I was wanting to get short again on the market, which I'm not. I'm 100% cash right now, but I wanted to. And I started seeing this initial fade, and I was like, man, should I chase after it? And I think back on my rules, and what do I do as a trader? I was like, no, I'm not going to chase after it. It's outside of my parameters, not going to do it. So it does that, and it just keeps on selling. And so then I feel like I'm getting left out. What a lot of people start to do at that point, they get the FOMO and say, I need to get short on the SPY. And then now it's at that point, the market just rips right back up. So you got to be careful around the FOMC statement. I was somewhat surprised it took as long as it did to get the true move out of the market. I mean, that was a pretty substantial sell-off that we got following the FOMC statement, only for it to rip 106 points higher on the S&P 500 going into the close. As for the daily on the SPY, let me pull up the chart for you. You have declining trend line here. What's interesting is you actually had a break above the 2.9 highs, February 9th highs. You had a break above this declining trend line. You're getting a little bit of that right now with this rally here. It's just slightly above it. Okay. In fact, let me adjust it just a little bit there. There we go. It's just a little bit above it right now. You had a similar move back on February 9th, but it couldn't sustain that move. So it's going to be very important to get that follow through in the days ahead. Now, a lot of people are like, what do you think of BABA? Did you see the move in BABA? Yeah, I did see it. It's like the biggest volume day it's ever had before. 36%. Do you go chase? No, I'm not going to go chase something like this. How do you manage the risk on something like this? Do you put your stop loss below $87? What if things don't? I mean, how often can you really trust what's coming out of China? So, I mean, they may say one thing, but do something completely different, and then you're bag holding on this one. I wouldn't get into it. Does it give me maybe a little bit more confidence to trade it going forward? Yeah, but look at this. Look at this massive resistance level here. Can it get above 111? That's going to be a huge, huge test because it held it as support for a very long time. But whether or not it can actually hold it or break back above it is going to be a major test for BABA going forward. 111.20 is going to be a key level. So let's say it can clear 112. That would be a major improvement for the stock. For now, I can also see where BABA goes all the way back up to resistance and sells right back off. Let's go ahead and look at, well, let me pull up Bitcoin here. There we go. Now, on Bitcoin, nice rally today. I mean, look at this thing. It's about 5.2%. Strong rally. A lot of volume. You see that? That's a big volume. Now, the last time we had a good volume bar like that, we had a decent rally that ensued. And on a number of these, we've had decent rallies that have come off of these strong volume bars. So you go back again to February 4th, strong volume bar. And this is all inside this channel. Now, things do get a little bit better if it can break above this resistance. If it can't break above the resistance, and that's going to be currently at about 45,260. So let's say about 45.5. Needs to get above 45.5 in order to really inspire the bulls to start buying again. Right now, it's trading at 41.3. So for all we know going forward, we're just in a major chop zone right now. So needs to get above it. I do own some Bitcoin, and I'm profitable in it. Not much. I think it's like 3 or 4% I'm profitable. I think I got in around like $36,000, $37,000 a coin. But it needs to get back above this resistance level. If it doesn't do that, then we're just going to continue the chop here until it either breaks above or it breaks below. So it needs to do both, one of those two things. All right. And one more thing about Bitcoin. Notice how it did today. I mean, that's a strong move, but it was also holding up when the market was declining on those FOMC statements when the S&P 500 was at one point red on the day along the Dow. All right, let's look at OSTK. EOG asks, faithful listener, viewer, it's not a podcast, faithful viewer of this live stream each week. Let's go ahead and pull up these charts here. Baba. He wants to know, what's up? Will OSTK rally? All right, so first off, you have a little bit of an inverse head and shoulders pattern here forming. Now the neckline's a little bit on the slanted side, so it makes that breakout a little bit on the difficult end of things. But left shoulder, head, right shoulder needs to get, and this is going to change every day because the neckline's increasing by day. So the faster it can do it, the 225 tomorrow. Then it would start the breakout. Now, there's other ways you could play it too. You could possibly say, hey, Ryan, what about this resistance level that's going across right here, this price level resistance? Can I use that instead? Yeah, that'd probably be a fair one to use as well. It may still run into trouble a little bit here with this candle wick that's just above, but overall, I do like the chart. I like the basing pattern. It's going to be a little bit difficult to get that entry along with a decent stop loss that would give you a tight stop loss with a strong reward. But there's a lot of reward to the upside. It's just going to be about how to manage that stop loss in such a way that you don't expose yourself to major losses. And OSTK is a very, very difficult one to manage the risk appropriately on. So some caution there. Notice too, and I'm just picking up on this as I'm looking at it, there's a little bit of resistance there. So you could see where, okay, let's say we break out at 57. Can it break above 65? Yes, if it got up there, you'd be sitting on over 10% in profits. But for OSTK, with a risk as much as you have to take on with a stock like this, it's hard to trade this thing without a stop loss that doesn't entail at least a 10% stop loss. So in that case, you're only getting maybe a little bit more than a 1-to-1 reward to risk ratio. Let's see here. Victor likes the fact that we're doing it at a more reasonable time. I'm glad you enjoy it. WEBR from Alex Ramirez. I have a similar pattern here, right? I mean, I'm looking at this Weber, and I don't even know if I'm saying the company name right. I've never traded this one before, but very impressive one. I'm going to add this to my bullish watch list, actually. Really like that one. Left shoulder, head, right shoulder, very close to breaking out. Again, it's going to be a very volatile trade setup here, so you got to know that going into it. But I would probably say, let's see, they could get above like $11.90, maybe even $12 if you want to use a round number. You have an inverse head and shoulders breakout pattern. Now it's also below this or above this declining trend line, so that's a positive development too. The left shoulder, head, right shoulder there. So you need to get above it. The big key is going to be, where do you put a stop loss at? I mean, you put it below like $9, $10. I mean, you're talking about massive loss if you're wrong on the trade. We don't want that. At least I don't want that. That's not how it works with my trading. So I want something tighter. I always like something like around 3 to 6%. If I can get into that area, that's where it starts to become a ideal trade setup for me. For WEBR, I mean, the closest I can put it on a daily chart would be like 1096. And so you're looking close to 8 or 9% stop loss there. What if we look at it from a 30-minute perspective? Now that little candle there, that kind of messes it up too, because it doesn't give you it's not going to change it at all. So that was from the Fed talk here today. It caused the stock to sell off really hard and then bounce right back up. Really interesting chart though. I'm still going to keep it on my watch list because I do like to follow those kinds of really nice patterns that set up so well. I mean, the resistance on it is very well defined. I mean, you got to like how crisp that resistance level is. I mean, perfectly touching it on multiple instances. All right, we got some more here lining up. SLV, NMRD, and CRSP. Let's go ahead and start knocking them out one by one. All right, SLV. This one's been on my list for a while here. You can see it had a nice little bounce here today. This support level has been very key on this pullback here. So there's the potential here that it's going to rally in the coming days, as long as it can hold the support level. If it breaks below the support level and takes out the day's lows and it offers a good reward to risk ratio, then I don't want to be in it at that point. But if it can hold this level like it's doing the last 2 days and go back up to these highs from like 24.88, that's really ideal. Good reward, good risk on that trade. I like it a lot. I like that it's pulled back to the support level. I haven't checked the Fibonacci, but let's take a look at that here. And I'm not a person that uses a ton of Fibonacci, but sometimes when you have a nice orderly pullback, I like to see where it finally found its bottom at. You can see it found its bottom at the 50% retracement level. So it followed some Fibonacci action there too, sitting just below the 38.2% retracement. So cool stuff. I always like it when technical analysis all works together like that. And it should be noted that the stochastics on it's about 28, so it's not overbought or anything. It's actually pretty close to being oversold. What do I think about Facebook? Like $1 million question. I saw some windbag on CNBC. talk about, oh, it's a steal under 200. I mean, you take a look at a stock like PayPal. I mean, people were saying that, you know, PayPal's a steal under 200. And if you would have bought it at 194, you saw the stock get cut in half again and go all the way down below 100. So just because a stock is sold off a lot doesn't mean that it can't sell off even more. I mean, if Apple and Amazon and Microsoft and Google really started dumping hard, Facebook would get destroyed. I mean, it's going to fall by as a result of guilty by association. All tech stocks would. So the massive gap here is kind of appealing. You have this massive gap. Okay, a lot of resistance right here. That if it does manage to bounce, you know, we're going to see a pretty good battle right there. Ultimately, and I told people, and you can click join down below to get in on the action, but click join down below. You can get all my stock market research each and every day, so you don't have to wait just every Wednesday. Provide updates on the FANG stocks, my watch lists, my setups that I'm looking at each and every day to possibly trade, some of the most intriguing charts that I come across each day. So check that out by clicking the join button down below for those watching on YouTube. But the long-term trend line hasn't been tested yet. I really can't get too interested in Facebook until I see a test there. Then I can become a little bit more confident. Right now, it's just kind of bouncing in no man's land right there. And from the daily standpoint, it doesn't look too bad. It looks like it's forming a base, but it's just so close. I would really like to see that bounce and hold of that 174 level. I think the market conditions, with the market being on the wrong side of the Fed, though you wouldn't know that today, the market being on the wrong side of the Fed does create the conditions for Facebook to ultimately come back and test that level. Can I look at art? Oh, wait, I got a couple more that I need to look at here that I failed to look at. So that was my thoughts on Facebook, but we also have NMRD. That's a tongue twister and a half. I can't even pull that sucker up. So I don't know if that's the wrong symbol or what, but CRSP. Seen a lot of these bases. Have you guys noticed that? CRISPR, another very volatile stock, biotech stock. So that means there's a lot of risk in biotech stocks. For me personally, I won't trade individual biotech stocks. And I know it sounds like I'm one of those people who, man, Ryan, what do you actually trade? Well, I'm very cautious about high risk situations. Even if the reward's really good, it can be really great in CRSP, but the risk that it carries can be quite dramatic as well. I mean, there's people bag holding off at $200 and it's now trading at 65. But you do have a little bit of a basing pattern there. I don't want to call it an inverse head and shoulders pattern just because it's so choppy. Also, I forgot to get my whiskey before today's live stream. So that kind of stinks. I was looking forward to that. My liver thanks me though. I wouldn't even call that a rally either off the lows. I would just say it's a nice basing pattern. It's good that it's back above the 50-day moving average, well below the 200-day moving average. Maybe some resistance there at 68 to be careful of. I don't know how strong that resistance is. It doesn't look overly problematic, but just know, I mean, these are stocks that are susceptible to some massive sell-offs. Downtrend's broken just above this average. So technically it's breaking out. So then you ask yourself, okay, if I'm interested in buying the breakout, where do I put the stop loss at? This is probably another one, probably like 11, 12%. I mean, there's really nowhere else to put it nearby. So the ideal thing would be is, okay, if it can rally and pull back, kind of like what we saw in the silver trade, if it can rally and pull back to this breakout level. So let's say it goes up to like 68, 69 and then pulls back to 64.89 and starts to bounce again. Maybe you get into like 66 and you can put your stop loss at like 64.50. That would be the best situation for CRSP. All right. Looking at REGN. Oh, we actually have an update. It's NMDM. All right. There we go. Now I just got to type it right. Okay, some support here at this $3 level. It's under $10 stock. Got to be careful with those because there's a lot more volatility in those particular plays. Still looks like it's a declining trend line here, right? Going all the way back to March. So there's not a lot of love that the market's had for this stock. If it does improve its situation some, if it can get like above 388 or so, then all of a sudden you have the potential to finally have a breakout of this declining channel. But then you run into some resistance here around the $3.95 to $4 range. It needs to get back above that as well. So nice basing pattern, but there's a lot of work that still needs to be done on this one in order for me to be bullish on it. REGN. See the question on this one. Can you give it a look? I entered small when the current rally started and added a bit today when the market's opened. What stop loss do you consider at this point? Greetings from Romania. Cool. Thank you for watching from Romania. All right, now let's pull up this chart here. And then Kyle Lawrence asked, did you already do the S&P 500? I did, but the good thing is you can go back and watch this. It'll be all on there. REGN. Nice breakout there. Look at that. Another biotech stocks. I mean, I don't remember what the market cap is on this one, but nonetheless, I mean, if anything is a biotech, it's going to have a lot more risk than your run-of-the-mill stock. Massive. It gets a little bit precarious to start chasing it at these levels because, yes, it's a breakout. It just broke out yesterday. But look at the move that it had to make in order to get there. So there's that point to where it breaks out and it can get really tired. So you got to watch that because some of these stocks, once they break out following a massive move, and it was just trading at, last week it was trading at 615 before it made that big move. So it's already moved 10+%. You got to watch for the fact that it might pull back here to maybe like 663. Stop loss wise, when it gets parabolic like this, and it's straight parabolic, I start to use this 5-day moving average here, this yellow line. I'll use that 5-day moving average, and if I get a close below the 5-day moving average, or I start seeing a hard break intraday below the 5-day moving average, that's where I'll start to get out. Because right now, it's difficult. Where would you put a stop loss at? Because it's just straight up. So the 5-day moving average, because it hasn't broken below that yet, and it's going to be aggressive and it's slope higher, I'm going to use that as my gauge. So if it closes below it, or if there's a sharp break below it intraday, that's where I would get out. For me personally, I also like to take profits along the way. I think taking profits is a healthy way to reduce risk and making sure that you come out of profits. Not yesterday, but the day before, Monday, I took about 5%. I had about a 5% profit. I took about a third off the table on my QID trade. I didn't know that we were getting ready to rally 200 points. Nobody did. But I took 5% off. And then when the market started rallying yesterday, I went ahead and closed the rest of it out for a 2% profit. But having taken some profits out on Monday made it to where I came away with a 3% profit instead of an overall 2% profit. So that does help out. It's never the fun thing to do, to take profits along the way. In fact, I usually hate doing it. And I don't want to say I have to convince myself to do it. I just have to remind myself, hey, you're in this not to get fanboyish about the stock or the ETF that you're trading, but you're in it to consistently extract profits out of the market. So whether it's this trade or the next trade or some trade down the road, I need to be consistent in how I manage not only the risk, but also how I manage the risk on those profits. So REGN is one, it's a huge run, but there is the risk that it might start to pull back here following a 6-day run. All right, so another person asked, your performance for 2020 was amazing, freaking 695%. Actually, not 695%. That's just the cumulative gains for each one of my trades. So it's everybody has different position sizes and how they do it. So there's not really a way for me to be able to show you on the trading block what the actual gains would be for anybody who would actually subscribe, because everybody's going to trade differently. For me, I may trade 10 or 15% on a given trade, whereas somebody else might be doing 20, 25% on a given trade. So all those gains are going to be different. All right, so takeaway time, guys. Crazy day in the market. It's tempting to want to chase all these moves. I know I was very tempted to chase it today as well. I hate seeing the market rally 100 points, and I don't have a dog in the fight. I would love to be part of it. But I also know, too, is that from what we've seen so far this year with the S&P 500, with the NASDAQ and the Russell 2000, there is not a lot of there's not a lot of conviction to these rallies. So maybe this is different. Okay, maybe this is the start to a brand new rally that takes us way beyond the all-time highs. I hope it is. Okay, I would like to trade a little bit more frequently, have like 5 or 6 positions or 10 positions in the portfolio. I love that. I enjoy that. But I need the market to show me that it can sustain the gains. And I don't want to just be a fanboy like I was talking about earlier, where I just jump into it because I'm afraid of missing out. Because then that's the times where you usually, that fear of missing out leads to great losses. Because if you had done what you should have done originally and what you were originally doing, and not let yourself get susceptible to the FOMO, you would have been much better. So think about that. More is less is more in this market. The steadier that you are, the less emotional you are about every single swing, the better off you're going to be. For me, that's having less positions in the market, because having less positions means that the emotions are going to be much more manageable. And so for me, doing this for about 30 years, I know what my limits are. I know how emotional I can get about different things. So I'm not going to put myself in a position where S&P 500 is dropping 66 points and I'm getting stopped out, and then the market's going back up 106 points. That happened to a lot of people today, probably. No doubt about it. But I'm guarding myself against those kinds of moves by trading what the market allows for me to trade and giving me those opportunities. So if you enjoyed this video and this live stream, make sure to hit the subscribe button and to make sure you get notified of all the future things. Make sure to check out the join button down below so you can get all my market research each and every day. Thank you guys, and God bless.